Yo, what's going on, boys? So this video is going to be pretty much a recap all across the month of March for my liquidity supply and demand strategy that I trade. I add my own kind of tweaks to it, but I'm really just going to go over this month. And this month was my most consistent month I've ever saw in trading, like in general, across everything. And I've been trading for a pretty long time now. Um, my most consistent month, and also pretty much go over all of the setups. Normally on the weekend, I will make a weekly recap. I'll go over the trades that I took for the week, but this week was red folders all across the board. Um, two live Trump speeches throughout the week, bank holiday on Friday, like a bunch of stuff. NFP week as well. Like I kind of knew there was going to be no trades going into the week anyway, so I didn't really expect much. And that's another thing that's not talked about. Like it's very important to go into trading and not expect taking a trade. Don't expect to be taken. If you go into every single day and you expect not to take a trade, like you're fully expecting not to take a trade today, and you're just kind of have it as a passive thing, right? You set up your zones, you mark your alerts, and you go about your day, bro. You're gonna eliminate so much over trading. That's kind of a big thing I did, and then when I started kind of just realizing like expect every single day not to take a trade, it helped me so much. So that's what I've been doing. But yeah, we're gonna go over every single trade that we've taken here in March, and give you guys kind of a quick understanding of my strategy. It was 11% month, 100% win rate. I didn't lose a trade. I took, I believe, 5 trades. One of them was break even. One of them actually hit my TP to pass 200K in funding, but it never got filled, and it reversed. So I just went to break even. Wasn't taking a loss there. But yeah, whatever. Pretty interesting month. But yeah, I'm gonna pull up the setups here and show you guys everything here. Okay, so I use TradeSave to pretty much track everything personally. Great platform, and you can see here pretty much all of the trades. All of the trades were taken at the beginning of the week, Monday, Tuesday, like on every single week, and then Friday we had a gold trade that again, just it hit my TP on my screen, but it never got filled. So very unfortunate, but it is what it is. And that was on Friday 27th. So that was it, right? And slower month, right? We have a horrible market condition going on right now, just with all of the war, and more importantly, just anything that releases, whether it be a Trump tweet, a news headline, anything from Iran, anything from Israel, anything from any other country, any tweets, all of this stuff is moving the market. And it's crazy. It's literally crazy. So it's super hard to trade right now, but we're doing the best we can. We're staying, I wouldn't say picky, but, we're just being careful, I should say, right? Being careful with the setups we take, understand that, hey, there's a lot of risk, especially the longer you hold these trades, that, something can come out. So, for a quick understanding of my strategy, if anyone's new that's watching this, I trade purely liquidity, supply and demand. So all it is supply and demand, except we like to see a nice liquidity sweep pretty much in front of it, okay? So if markets are trending down like this, occasionally you will see areas like this where price will come up and take a price will come up and take a level of liquidity, and tap into a supply area to the left, right? If we're trading, bearish trend, price will take liquidity, tap into a bearish order block, supply zone, whatever you want to call it. And if we get our entry candle, whatever that means to you, right? For me, it means a couple different things, right? We have couple different entry candles to use, and if we get that, then we'll enter short to continue with the trend. And you'll see it time and time again, right? Price is always putting in lower lows and lower highs, but price is also always taking liquidity algorithmically before moving in direction. So, but yeah, for this trade, your JPY, this trade, the exact same thing, right? My session starts around 4:30, and I trade till about 10. So, price bearish, right? Price, I could really zoom out, but price is bearish, right? And price is putting in continuous lower lows and lower highs, right? So we have a nice supply zone right here that is created, right? And price displaces lower and we consolidate. Now we consolidate, we build orders on both that buy side and that sell side. So what price is essentially doing is I do have a rule that price must take out its last low, at least, whether by a wick or whether it's candle close, whatever. It has to take out its last low for this to be considered liquidity, okay? And you can see that price did that right there internally. We have a low, we have our highest high within this consolidation, and that price takes out that lower low. I'm fine with considering this as liquidity, okay? And that's just a mechanical rule that, I try not to break, or I don't break at all, even though this move as a whole is pure liquidity, right? All this is generating liquidity. And we know price is already bearish, right? We need to take out opposite side liquidity before continuing down. So all price is doing is consolidating, generating that liquidity, and we get that manipulation to that buy side, take out all the buy side liquidity. Price takes that buy side liquidity, right? Beautiful reaction, which is kind of what we expected, because this is, again, a manipulative move to take out that buy side liquidity, react from that supply zone, get that candle flip, and as soon as this candle pretty much opened and we started getting that bearish momentum, kind of carried over from that candle before, shorted that, and I only wanted to target to these lows. That's all I wanted from this move. And then that's exactly what happened. On some higher time frames, we were pretty much tracing into a zone right under here, a demand zone, so kind of have to be very careful and picky with what all you're targeting there, because if you're trying to get too greedy, then if we start reacting from a higher time frame demand zone or something like that, price could easily reverse and stop you out. So got to understand where you're at within the market as well, and that's kind of what I did within that trade. And yeah, that's pretty much that's the first trade of the month, March 3rd, around 6:50. I was only in this trade 10 minutes, if that. And 1 to 2 was hit. So that's that trade. And next we're going to go over NQ and UJ. So this was, for 6% week, if you were risking, again, 1%. But yeah, we're going to go over those real quick here. Okay, so here we are on the NASDAQ. We got the weekly open right here, okay? So we got this weekly open. There was other reasons to take this trade as, a buy. Because internally looking at it, you're going to think we're bearish, right? But I had personally other internal reasons that we were going to go bullish, and second of all, another reason is because this week just opened up and we did not have a weekly top wick yet. All we did was dump, and we continued dumping to the downside, and then price started to eventually come up to fill in this overextension, right? And that's exactly all it was. So as we're doing that, we're going to be taking opposite side liquidity to continue doing our overall objective, which is putting in this higher time frame wick, which was also, again, this was on different time frames. This was an area that I felt as if we were going to get buying pressure from. So on that 5-minute time frame, I was bullish, okay? So I was bullish, targeting this, and internally, as we're doing that, we're going to have your manipulative liquidity sweeps, which is exactly what we have right here, right? So all of this is just generated lows, right? This is generated sell side liquidity lows. So generated sell side liquidity lows, price comes up again, we get that rule that I kind of tell you guys that I want to see, which is price taking out that last high. We wick above that, take out that last high, and then price comes back down. Price comes back down, takes out all of that generated sell side liquidity, manipulates it below it, just takes it. Now we took opposite side liquidity. Now we can continue our overall trend, and those two things checked out. Waited for that, what I enter here, break of candle I entered. If you would have waited for candle close, you would have got a slightly better entry. And again, if you would have FOMO'd in or anything like that and don't have strict rules, you could have entered, the whole way up here and made a 1 to 4 into a 1 to 2.5. So, yeah, it's kind of important that, see your setup, understand, your reasonings for entering, understand if you want to enter this trade, and have clear entry rules to, as soon as they, happen, react off it, right? Because, that's one big thing I always did a long time ago was I would just FOMO into trades, and then you'd get a horrible entry, and then this candle would maybe even just flip down and go bearish, and it'd just be an invalid trade, or anything like that, and you just kind of screw up all your entries. So have clear rules, and that's what I did. I entered break of candle, which pretty much means as soon as this bullish candle starts reacting from this demand zone after taking sell side liquidity, and we start breaking past that first initial candle that tapped into that zone, I will enter break of candle, which means as soon as we wick past this candle's high, whether that be the wick or the body, I will enter. So yeah, that's what I did. Entered that trade, put that stop loss right under that wick, and price again started continuously chasing to this weekly high right here, and that is exactly what you saw. And again, price continued just ripping bullish. So yeah, that was that second trade. Again, real picky with that because this first week here we had this good position, and the rest of the week we had multiple positions that people were losing money on. And this week we had this beautiful NQ position, we had this UJ position, and again we had 2 or 3 positions that a lot of people took that just lost. And having clear outside confluences that work for you, and a confluence is just realistically a better understanding of how the market's moving, why we're chasing certain prices, and making sure you're in line with that. That's going to allow you to skip a lot of losses. So that's kind of what I do. I don't really go over exactly what I use here on YouTube quite yet, but it will be potentially a thing in the future. But yeah, so that was NQ. We're going to go over UJ now. So again, same strategy I kind of showed you guys with the path tool, right? If markets are trending, we want to see a nice liquidity sweep and a continuation. I could draw this in 30 different forms, okay? You can have liquidity in the form of this, right? You can have that liquidity in the form of that. Is there still liquidity under these lows? Yes. Okay, it's just really, always drawn out to look like this, because that's the cleanest forming setup that you can do, right? All it is, you're trading supply and demand, except we're taking a level of liquidity before tapping into that supply or demand zone to, up our chances of that zone winning, due to it manipulatively taking liquidity for our zone. So that's realistically all it is. And again, you see a different type of form here on this one, right? Lots of just even lows, lots of stacked liquidity right here. Price comes up, takes out that last high, and this was again right after New York Open. First about 15 minutes, 30 minutes of New York Open is your most manipulative. That's when we're going to nonstop be targeting liquidity, and that's exactly what we do, right? We take out this high, price chases opposite side liquidity, takes out sell side. All of this generated sell side taps into our demand zone. All of that checks up. We're chasing higher time frame bias, and that's exactly what we're doing, right? We're chasing to this wick. So that's exactly what we do. Put in that top wick for that weekly candle. So beautiful trade there. Now off to UJ. All right, boys, here we are on UJ. So this is a trade that I could very much go into depth with, into detail with, but it's stuff that I don't want to put on YouTube and explain totally in depth yet, because I'm still working on putting this stuff in a community. But this trade was an interesting one, right? You might look at this trade and be like, oh, we're bearish, why are you taking longs here? Because there's other reasons that price is going to continuously go long from here, and that's exactly what we did, right? I don't know what just happened. Anyways, I have other reasons that price is going to continuously go long from this area with other time frames, okay? So with that in mind, I had kind of a bullish bias, right? And also within that mind, I had some confluences. Again, I'm not going to go into detail, but confluences that price was algorithmically going to go and take this level right here before we did anything. I was very confident in this trade. So for me, this entry candle could have been down here. This entry candle could have been up here. I don't care. I was going to be taking this trade, and a 1 to 2 really wasn't even that bad. But I was going to be taking this trade because, first of all, I was confident that price was going to go and chase and algorithmically take this level of liquidity right here due to a couple reasons. Whether we take that liquidity and run down a little bit before continuing up, I don't care. I knew that price was going to go and take this level of liquidity, and that's why I only targeted there. My normal rules are usually, if there's no reason not to, target a 1 to 4. But when there's a reason not to, and when, I'm very skeptical, I will only take, TPs at a certain level if it makes totally sense to me. And again, I take these trades and I align, my TP rules with them. It's not like I enter this trade and I'm like, maybe we'll target here, maybe we'll target here, maybe this price starts reversing on me and I sell. No, I predetermine TP based off of, market structure. And there's reasonings behind everything. So for this trade, again, same core understanding, right? Price, demand zone. We have a level of liquidity. We have price putting in that new high, taking out that last high right there. Price comes down, takes that level of liquidity. We don't close in our zone, right? That's what we need. That makes it valid. And we get our candle close. We get our bullish candle close. That makes it valid to take this trade. Take that trade, stop loss under that wick, that lowest wick that tapped into that demand zone, and price runs to TP to algorithmically take this level, and then we reverse internally, and then we continue higher time frame bias, which is bullish. So that's pretty much, some reasonings for this trade. And again, price liquidity really wasn't that strong here. I know that, right? I know that, hey, price really isn't, it doesn't have that much liquidity compared to something like NASDAQ that I showed you, right? Where we have consolidation for like 2 hours of just pure sell side liquidity and the price just mops it and continues trending up, right? I know that. But you have to tie this entry model with other confluences. I knew that price was going to go and chase this high. So yeah, this liquidity is a little bit weaker, but I'm still bullish. I'm still very confident that price is going to go take this high. So I took this trade. That is why, right? So you have to have your entry criteria met, which I do, right? This is valid liquidity, but you just have to know when to use that, when to be more aggressive with it, when to be less aggressive with it, when to just skip trades even though they might look perfectly fine in the 5-minute time frame. All that stuff is pure market experience and just backtesting and journaling and gathering data and just fitting what works best for you and what you understand best. That is why 99% of people trading even this model, I believe, can't get it right. Now, I'm not the person to say that I'm out here mopping, $10,000 payouts every single month, this and that. No, by all means, no. But I have been finding consistency within my trading for the last months on end. And I've been trading this strategy for a very long time, and I've seen everything. I've kind of been put through everything. I've been put through those winning seasons. I've been put through those losing seasons. And yeah, this is kind of what I've been finding out over and over and over again, is like everyone just kind of focuses on this 5-minute and that's it. That's not the way it should be traded. There's other reasons why the market moves the way it moves, but it's taught by some, not the brightest people in the space, in my opinion. But again, I'm going to have the community in the future coming on explaining pretty much everything I do head to toe. How I am, more laid back with my trading, how I'm not taking all of these losses all the time. I literally took like the only wins that March even provided, right? Because March provided, not the best. Even February, everyone went negative. My even, mentor in this space, right, went down 5%. And I know this for a fact, right? They won't say it. No, they won't say it. You will never hear them say it, right? But I personally, I took 2 trades and I took them both at break even because they were reversing and I knew price was going to be targeting different levels under my stop loss. So I got out and they did, right? They went down and targeted lower levels. So I saved myself 2 losses there, and I would totally admit, like February, I went break even. I literally took 2 trades. Anyways, February, I literally took 2 trades, break even, and that was it. It's horrible market conditions. I've never actually even really got that in back testing either, right? Horrible market conditions. But guess what? As much as that sucked and as much as it felt like you weren't doing anything, you performed better than pretty much 99% of people that trade this strategy. And it's the same thing even I feel like in better months, right? Again, months that everyone's green, you can still skip a lot of losses. You can still, be more picky with your setups. The thing is a lot of people think, especially what I do, is just like, oh, you're being too picky with those setups. So, when winning seasons come around, you just, you're going to skip out on a bunch of trades. That's not it at all. That is not it at all. I have back tested years on end. And even when those good months come around, there's trades that look better with more confluences, so I'm taking them. It makes no sense, It's not like I'm just picky with my setups. No, I use all my confluences. If this trade looks good, great, I'll take it. If it doesn't, it doesn't, and I'll skip it. It's really that simple. Use your other confluences. And again, I know I don't put those in YouTube, but look for yourself, and it's really not that hard to find and to pick up a couple things here and there and just be like, oh, well, on the hourly time frame, we're reacting from a demand, so why am I shorting on the 5-minute time frame? That is the most basic thing, and it's not even taught. It's the most basic thing that's not even taught. So just see that and be like, oh, yeah, why would I do that? And then, sure enough, that trade, loses. And it starts pushing higher. Why? Because the 1 hour time frame's bullish. Okay, so then people's going to be like, oh, you're too picky with your setup, so when those winning conditions come back around, you're going to lose. Bro, no, I'm just looking and analyzing the chart, at a kindergarten level and just being like, oh, that's kind of obvious. I'm going to skip that trade. That's just an example. That's literally the most basic example. People's not even using that. And I use, a lot of stuff that, works like 85% of the time. And they're dead on. And that's just one little example, like a 1 hour demand zone. You're on a 1 hour time frame and you're looking and you're reacting off a demand zone. You're on the 5-minute time frame. You'll see something like this, a nice entry model, but in a bearish form, look absolutely beautiful. Everyone's on that 5-minute time frame. This trade looks great. This trade looks great, bro. Price does not move on a 5-minute time frame. You have to be retarded to think that. Price does not move on a 5-minute time frame. 5-minute time frame lies to you. Higher time frame tells you the truth. Do you want to be in line with the 5-minute time frame, or a higher time frame? Probably a higher time frame. That does not mean and that doesn't mean 4 hours bullish, so I have to be taking bullish 5-minute trades. No, right? It goes very in depth of on those higher time frames, what we're chasing, how we're chasing to it. If price is moving efficiently, price is moving inefficiently. And all of this stuff paired together with all these different time frames, where you're reacting from, where you're chasing to, all of this stuff, right? And I'm trying to not, name drop all of these things, but it's just a couple common things like that people can be using, but they don't. So, yeah, got off pretty much on that tangent, but you get what I'm saying. Pretty much align, some other stuff with this 5-minute liquidity supply and demand strategy. No one talks about it, and I will never, I won't say what I'm using and exactly how to use it, because that's another thing. I can say what I'm using, but if you don't know how to use it, then you're kind of cooked. So, again, I will eventually have that in a Discord, but for now, I'm just focusing on my trading, getting better every single day, in and out of the markets. But yeah, we're going to go over the second UJ position here. This was just a week later on another Tuesday. This is for like a 1 to 3, 1 to 2-ish. It was kind of hard to say on, I entered on multiple accounts, so it was kind of hard to say. So yeah, we'll go over that one real quick here. Okay, here we are on UJ a week later. And again, internally, price was bearish. And yeah, here's pretty much market structure. So this was a trade that you needed to be quick with. And in my opinion, what helped me get more consistent results is you need to be very, very almost passive aggressive in your trading, I should say, okay? And what I mean by that is like I don't know how to say it. Okay, you need to have like, say you have this supply zone, you have this level of liquidity, and for me, like shout out Myrtle, he has he built an indicator, right, for this kind of this strategy that all it does is mark out supply and demand zones and sets an alert on them, right? And obviously it's a code, so like not, it's going to give you more false like reactions than real actual trades that you take, right? Because it's a code. But still, you have those alerts, so it's like, bro, you should really not even care about what market is doing unless it taps your zone, okay? And what I do personally is like kind of how my setup is I'll have my MacBook and I'll have like another monitor that I'm doing actual work on, like not on the charts, okay? And you need to be passive aggressive in your trading. What I mean by that is you need to just chill, and then boom, when you get your setup, react on it fast, instant, boom, react on it. Let that setup play out. Plays out, no matter win, loss, cool. Then you just need to go back to chilling, bro. Just chill, less screen time, get off the markets, have your alerts set. When you get those alerts, react, right? Chill, another, couple days, nothing happens, and obviously I'm not saying don't check the markets, right? Check the markets, but I think a lot of people are just like on it too much, right? And for me, it's just, I had this alert set, my MacBook sitting here, and my monitor's right in front of me, and I'm working. I get an alert. Look to my left. Oh, cool. That was that UJ trade that I liked. Again, passive aggressive, right? You're just chilling out, but when something, goes off, boom, react instantly. And this this candle flipped in like 3 minutes. Okay, this candle was right here, and price wicked up and tapped into the zone, and pretty much flipped from here, right? Price wicked up, tapped into the zone, and came back down, and this was a new 1 hour candle, right? Okay, so this was a new 1 hour candle. So price came up, wicked into this, and flipped, right? So it happened very quickly, again, like 3 minutes. And again, you need to be passive aggressive because my monitor's sitting here to the left, and my MacBook's sitting to my left. I have my monitor and I'm working, right? This trade comes up, I react, I see it. Oh, cool. That's that UJ trade. I did my analysis in the morning around 4:30. I knew that the bias for the day was bearish. I knew that I was looking for sells. What's price do? Give me a beautiful sell position. What do I have right on right on my MacBook? Everything to place that trade. I have my trade locker up. I have my trade evade up. The trade evade's for futures, but this wasn't a futures pair. But I have all that stuff up, right? And it's like, oh, cool. Click on trade locker. Literally, you just drag your stop loss, and I'm watching it on my both my screens. Boom, it flips. Enter. Cool. Entered. Literally entered. Make sure my stop loss was there, and knew I was targeting this this level. And I set my TP, and I go back to working on my monitor. Boom, boom, boom. Do my monitor. And I think right here, one of my accounts got tagged out. It was like right here, one of my accounts got tagged out. And I was like, cool. TP hit. Waited another, what was that? Like 40 minutes, and second TP got hit. And again, that was 40 minutes. Like at this time, old me, I would be like staring at this and just wasting 40 minutes of my life. However this trade plays out does not matter. This is just literally just data and letting your data play out on a higher time frame. So you could be the trader that sits there and just watches this, which used to be me. It'd be just watch that, like, please go down, please go down, please go to my TP. Or just be like, cool, I did what I needed to do. I did my job. I was passive aggressive, right? My setup came, boom, reacted. And again, this setup played out for 40 minutes. I could be the trader that wasted 40 minutes of my life and just sat there and stared. Or I could just do something that I'd normally be doing throughout the day anyways. So I'd go back to my monitor, finishing up some work, get some food, go lift, doing all that stuff, and then before you know, your TP's hit. And it could have been stop loss hit. I don't care, right? Because whatever the outcome is, you could either sit around and wait for it to happen, or you could just still go do something and level up outside of trading. Level up your life, level up your other business, like do something. And that was kind of my biggest thing. And it's, even with a strategy that you get entry models that's thrown at you every day. If you don't know how to do other work without sitting at the charts and just hoping a setup pops up, bro, you're cooked. You're cooked. Literally cooked. And time will just, show you that, because again, that happened to me. I'm not giving you these examples just randomly. Like, this is literally stuff that I was put through. like literally put through, because I would do the exact same thing. I would literally sit there and just, I hope this happens, I hope this happens, bro. And a setup would take an hour or two to play out just for it to hit your stop loss. But in an hour or two, you could go be doing something. You can have so much done in an hour or two. So yeah, that's kind of a big thing I had to, overcome. So that's pretty much it for this month. And I'm not gonna, ramble too much more, because realistically, I just wanted to go over this. This gold trade, I'm pretty sure I made a video already on it, so I'm not really gonna go over it. But yeah, again, great month. I obviously I can't complain, right? You kind of expect, a loss or two in here, and I know not every single month obviously is going to be like 100% win rate month and all this stuff. No, it's not, right? It's a great month, right? It is what it is. And I'm not arrogant enough to be like, every single month's going to be 100% win rate month. No, can months be bigger than this? 100%, right? Like, this was still a pretty dry month in my opinion. But other months that perform a little bit better, you're gonna have more losses. 100%, bro. 100%. You're gonna have your good months. You're gonna have your slow months. Check out February, bro. 2 break-even trades. Yeah, February was like nothing. But yeah, that's pretty much it. That's March. If you guys have any questions, about like my strategy or anything, let me know. And again, I will be opening a community at some point, right? But again, I'm just focusing on pretty much leveling up, inside and outside of my trading every day. So that's pretty much it. And yeah, thank you, boys. If you have any questions, comment it, like, subscribe, and I'll see you guys on the next one. Peace.